Hello, everybody. This is the Tuesday time of the week where we look at everything and find out where we've come from over the last week, how bad or good or ugly things are, and break it all down. This one's called The Aftermath. Big thank you to the mods in the chat for being here. TD Tesla, Shawnee, K8, and everybody else. Thanks all for coming. Let's get into it. And yeah, we've been through, well, by my count, 4 mini gray swans already this year. Things like Iran, things like the SaaSpocalypse, things like the Fed's not cutting rates. And then finally, we had the black swan of Bitcoin dipping very fast. Its fastest dip ever. And nearly $11,000 red candle. Not good. Not the Omega candle we were hoping for. Anyway, let's get into it. And disclaimer, not financial advice. And big thank you to everybody on Patreon. This is from Neon River Productions. I'm a happy Patreon member. Thanks for being part of the team. Let's get into the ugly news first. And I'll warn you, there is quite a bit of ugly news. First of all, crypto over the last 7 days, Bitcoin, wow, it was bad. And in fact, some of the other assets sold off even more than Bitcoin. So we'll break it all down. That's in Bitcoin terms. And in dollar terms, you can see it doesn't look quite that bad. Like literally since I did this show a week ago, Bitcoin's only down 1.38%. But boy, was it a volatile week. Other assets down a lot more. But we'll dig into all that and find out where we have come from. Now, a new exhibit. This is crypto over the last not 30 days, not 90 days, but the last 365 days. And it is kind of telling to see kind of where we are. One of the things that did pop out from this chart that I found very interesting is over the last exactly 365 days, Ethereum's down 33.9%. Bitcoin's down 38.2%. Remember, Ethereum was really beaten down before Tom Lee came in with the digital as a treasury company and then helped it recover quite some amount. Zcash is the winner over the last year by far, 524.7%. Privacy is a thing, but that's also been a very volatile road to hoe. And then everything else just down, so much down, 80%, 77%, Polkadot down 77%, Sui down 75%, Near down 73%, Caspa 71%, ICP 70%, tons of stuff down really, really hard. It's been ugly. Sol down 60%, Chainlink 60%. It's just not a good year. And the question that people have is, well, is it going to be a bear market for another year? But the point is, we had a nasty bear market already. This is where things get a little bit different. Anyway, let's get into more ugly news. Delinquencies are now 5% of all loans, the U.S. share of delinquencies. This is U.S. household debt in Q4, highest level since 2017. And credit card loans, at least 90 days delinquent, hit 13%. I'll say that again. If you imagine 100 people with credit cards, 13% of them have not paid anything for 90 days. They are delinquent. That is the most since the global financial crisis. Auto loans and serious delinquency are up above 5%. That's the 2010 record as well. So things are just bad out there. People are not managing their debt carefully. Be very, very careful, especially if you've got something like a credit card loan and it's at 20% interest or even higher, 29%. I got 2 cards that are at 29%. I don't carry any balances, but it's shocking to see what I would be charged if I did. And there's no way of escaping that level of interest rate. That's like loan shark territory. So be careful out there, my friends. Let's get into the bad news. Fear and greed, extreme fear for crypto, 9. We are terrified out there, but the numbers don't kind of reflect that, which is unusual. We have had 5 red months so far. Obviously, it's been nasty. October never happened, down. November, brutal, down 17%. December, down. January, down. February, down. Very rare is Bitcoin down 5 months in a row. Very, very rare. I just want to stress that. So the question is, could things turn around in the month of Feb? I don't know. We need to look at money flows, and we'll get to that shortly. Now, one little tiny glimmer of hope is this 200-week moving average chart. Super simple chart. Keep it real easy. The best charts are the simplest ones. But here you can see the 200-week moving average price is around $59,000. In a bear market, the 200-week moving average acts as support. And we got pretty close to that as well. So could I keep saying, like on DCA last week and the week before and the week before that, we're very close, way closer to the bottom than we are to the top. So some people believe this is a good time to buy. Let's talk about some of the more, before we get to the good news. There is lots of good news, by the way, so hang in there. Another piece of bad news is there is apparently, per Kalshi, no Fed rate cut for March. By the way, people think these prediction markets, they're just people playing, having games. No, they've never been wrong in predicting the actual Fed rate cuts. Right now, we're looking at an 80% chance that there will be no rate cut in March, which would disappoint a lot of people. It disappointed people in January. It'll disappoint them again today, too. So we need something to change. Anyway, another piece of bad news. It was leaked on a government testimonial, whatever. Waymo executive admit remote operators in the Philippines help guide their robotaxis. So for years, they kept this secret, but now we know. So that's super interesting that you're in a taxi controlled remotely by people in the Philippines. Shout out to everybody in Manila. Anyway, moving on, PMI, as we saw, spiked to 52 or 54, if I recall. But unfortunately, it is not reflected yet in manufacturing jobs. U.S. manufacturing employment keeps on losing jobs. Another 8,000 lost in January. And that is the 32nd, believe this, 32nd consecutive monthly decline and the longest streak since 2010. So jobs in manufacturing are not there, and jobs are getting hit across the board as well, which is kind of ugly. And I'm very happy to be done with the ugly section. Let's get into the good news. I always like to get the ugly stuff out of the way first. This is in the good news category because we only went slightly negative last week. Despite the week that we had last week, only a little bit of sell pressure was in the ETFs. And that is, I think, a positive inflection point. I think things could actually turn around right now. People are buying the dip. TradFi might be stepping into Bitcoin. I've heard lots of anecdotal stories that people bought their first Bitcoin last week. They'd been waiting for a long time. Many believe they could never become whole coiners, and they were able to achieve that dream last week as well. So anyway, the volumes did hit a record, $63 billion, never happened before. And we have the lowest levels of assets under management, I think, since March 2025. So yeah, there's been a big sell-off, but the outflow is very small, only 187 million. So we'll take that as a win. Flows by asset, another interesting tale. And not everything was positive. Of course, Bitcoin had 260 million out last week, but XRP, Solana, Ethereum all had inflows, 63 million, 8.2 million, and 5.3 million respectively. So that is pretty impressive when you see that. And not only on the 8th of Feb, we had a little positive inflow, but the 9th of Feb too, a positive inflow. No, sorry, the 6th of Feb, Friday, and yesterday was Monday. Today we don't have the numbers in yet, but these things are turning around, which is positive, but we need sustained momentum, sustained inflows. That's what drives the price. Anyway, other things that did drop, which actually could be construed as good news or bad news, depending on how you look at it, but the hash rate did drop 11% in a week, and that's the biggest drop in a very, very long time. That means miners are unplugging their machines. The security of the networks go down. But with the hash rate going down, it makes the difficulty a little bit easier for some to compete. Now, this takes us to why we care. If we look now at the cost of production of Bitcoin Bitcoin price is back at its cost of production. This is why this is in the good news category, because when the hash falls, the cost to produce falls. The big driver of that is electricity, etc. Now, why do we care about this? If you look at the cost to produce, this ribbon, the purple ribbon, all the way along, guess what? Every time the Bitcoin price hits the ribbon, what does it do? It bounces. It bounces nicely. So, could this be a bottom? I know in March 2020, that was C19 news time, it did pierce the ribbon, but since then it hasn't. So I take this as a positive bottoming sign because history says so, but maybe history will not repeat this time. We're not sure. Anyway, moving on. The Bitcoin daily ETF flows, as we saw, positive 145 million. Good. We'll take that. AltSeason, nope, still at 39. We've been at this weird 32 to 40 plus 42 range for now months and months. No AltSeason whatsoever. ETH Weekly ETF flows came positive. That's very good for ETH. 57 million for the week. Sol had the first negative week in forever, which is unusual because that doesn't jive with the previous chart. Let's go back to slide 18, I think it was. So Solana had 8.2 million week inflow, but sometimes you got to look at different sources to get different information. We'll see what happens. ETH was positive, Sol was negative for the week, down 14 million. I will dig into that and find out why this is off. Something is wrong. Maybe this, I know what's wrong. So this doesn't take into account international ETF flows. That's the problem. The other one does. It's a global aggregator. Forgot that. Now you can see I didn't have enough coffee today. Speaking of other crypto news too, this is an interesting sign. And I have shared some stuff on stablecoins and the amount of transactions and volume. But this is what they call TPV, total payment volume, the total dollar value of payments processed on a platform. And Artemis uses this like stablecoin transfer volume, payments transfer volume as a proxy for TPV and blockchains. And you can see here, top TPV growth rate, Solana 755%, Binance 648%, Ethereum 625%, and Tron 493%. But the point is, crypto is now being used more and more for payments. And that's a massive use case. And money's been sent around left, right, and center using crypto. Now, we hope to get the Clarity Act back as long as the banksters will agree to allowing crypto companies to pay yield on stable coins. That's what's hanging this whole thing up. If they will allow that to happen, of course, the gravy train for banks goes out the window, but it will really propel the use case for crypto as well. There's no denying stable coins are a much better way to move money around, and it will be huge in the future, and they will continue to grow. So we'll watch this very carefully, but it's also great to see Solana top of the list too. Now, other news regarding Solana, Sushi Swap, which is the legendary DEX, one of the most established DEXs, is now ported over to Solana. So now an extra 4 million people will be able to use Sushi Swap. And not just that, XRP, wrapped XRP is now expanding access on the Solana network too. So everything is going to the black hole once again. And despite the price action, nothing is slowing down in crypto. ETH had record transactions. Solana is back at over 6 million daily active users and more transactions than ever before as well. So crypto is not dead. It's just the price action is dead for now. We'll see. Speaking of Solana again, 740 days without any outage, which is good. No stops, no interruptions. And this is a solid level of reliability. As I said before as well, ever since people started deploying on FireDancer, etc., the odds of a outage now are impossible. The network can't go down because it has so many different validators running different types of software too. So that's good news for the network. And by the way, that was the piece of FUD that people used for years saying, oh, the network's always down. Well, over 2 years, nothing. Anyway, stock fear and greed, 49, very different to the extreme fear for crypto. And these two are sometimes they're in sync, sometimes they are not. Stocks are very mixed last week as well. And we know the reason why. But Nvidia was up, Apple was up, both up 2%, Google down over 8%, Microsoft down 1%, Meta 5%, Amazon down a wicked 15%, Tesla flat. Flat. Why? Why are Google, Meta, and Amazon down so big? Well, if I had to point my finger on it, I'd say it's because of this. The Capex plans spooked markets. Amazon planning 200 billion in Capex. Google 185 billion. Microsoft 150 billion. This is just in 2026. Meta 135 billion after flushing 76 billion down the toilet with the metaverse. And Tesla, paltry 20 billion, but they're very capital efficient. When they spend money, they don't spend it willy-nilly like other players. Anyway, the point is tons of money is being spent on AI. The race to AGI is on. So do not fade this actual money flow. Now, this is a hyperscaler backlog. Interesting to look at too. Microsoft leads the table. I think Oracle may have even more, but they're not really a true hyperscaler as I would consider them. But Microsoft has 625 billion in backlog, and Google and Amazon both about $250 billion each. It's crazy to think that companies could have $250 billion or $0.6 trillion in backlog because the demand for this AI stuff is so high. Incredible. And Google, back to Google again, they're playing a little bit of a 4D chess because I think a week ago, the Department of Justice filed an appeal for them to divest Chrome and some of their other assets like search and YouTube. But I don't know if this is a 4D chess move, but it's very clever. But they have basically got authority to sell $100 billion in bonds. Now, these bonds are sold to pension funds and insurers and sovereign wealth funds, etc. And they can't repay that debt unless they have all the cylinders that Google fires on. So basically, it's like a regulatory defense mechanism that they built, and nothing like this has ever been constructed before. So now, if the Department of Justice tries to make a Google divest something like Chrome, they can't because pension holders, etc., have debt with this company, and they need those assets to repay that debt. So it's like a poison pill almost for the company, which I thought was very fascinating on how how you can build this type of debt structure to actually preserve your company. The other two things that are very interesting about this is Google had almost zero debt a year ago. Now it's heading towards $100 billion. But they also warned in their perspective as well that AI may render their core business obsolete, which is super interesting. Like to say that in their prospectus is like AI could kill our business just like that. But I think Google are going to be just fine. But it's nice to see that level of paranoia in their prospectus nonetheless. Also, IT sector investment is booming. Literally, this is going up and vertical. This is the investment in property, plant, equipment, data centers, all in technology. Again, huge amount of money going into this space, and it's not slowing down. Also, computer imports are surging as well, not slowing down. Large computers, which are like GPUs coming in from Taiwan and Korea, etc., very, very big for this AI boom. Now, we'll talk a little bit about Tesla. There was a great interview with Dwarkesh, and I think this guy is one of the founders of Stripe. I'm not sure. I think so. But it was nearly a 3-hour pod. But there was a couple of things that were very interesting for us because Optimus will address the biggest TAM in the world until 5 years, 7 years from now, space data centers that could maybe be bigger. I'm not sure. But a couple of things that they did leak were very interesting is the plan. Optimus 3, which is supposed to be human-like and sublime, will do 1 million units a year. That's the target. And the target is to build these 1 million robots in Fremont, California, ramping this year, but it'll be a slow ramp. So don't expect 1 million to pop out this year. Maybe if we're lucky in 2027, but we'll see. This stuff is very tricky, takes a long time. Also, they got to build everything in-house themselves, all the motors, all the actuators, all the sensors, all of that stuff. And then they get to 10 million units a year when they open up the Texas plant. But that will be for Optimus 4. And these are the targets. Now, the other cool thing that they did mention is they will deploy between 10,000 and 30,000 of these real robots, Optimus 3s, in what they call the Optimus Academy, so they can learn how to do stuff, like sending your robot to university to learn real world applications. It's kind of mind-blowing as well. And this will all be powered as well by their Cortex supercomputer, 350,000 GPUs. Crazy numbers. And this thing is taller than I expected. 5'11", is designed to be very strong, very robust, not break, work 24 hours a day without overheating, etc., and hand dexterity better than a human. Ta-da! That's incredible. Threading a needle, doing surgeries, all that type of stuff is the vision for this thing, Optimus 3. Again, this is going to be life-changing. The world is moving to robots, as I stress and have done for a long time. It's no longer a dream. They are real. The question is, who will win the robot race? My money is where. Now, other kind of bad news, but AI news, but it's kind of in the stock category because we did see a massive wipeout of value. I've been warning about kind of SaaS stocks were going to get hit for a long time, but Anthropic came out with a desktop AI plugin and literally within 48 hours wiped off $300 billion of SaaS and services market cap. Just that's called the SaaSpocalypse happening. And other things, the valuations have compressed. Forward PEs are now 2x. And this is the fastest compression since the dot-com bust as well. And things like legal services, like Thomson Reuters and LegalZoom, etc., got completely hammered as well. And people are now figuring out that, yeah, AI is a real threat to incumbent software companies. Then people say, oh, no, well, why can't Salesforce, etc., just use AI? It's just not that easy. Anyway, the SaaSpocalypse is happening. And there is, again, in the theme of amount of capital being invested, Singapore GPU demand has tripled. All of a sudden, Singapore is a very special place. They're always the first mover in things like telco. And I remember they went to fiber optics before anybody else and had the best internet standards in the world and the best cell phone networks. But now they are building a 200 megawatt data center as well. And they ordered $3 billion worth of GPU, probably NVIDIA Blackwells too. And they'll suck in about that 200 megawatts of capacity. And that capacity will be, at least this order of GPUs is allegedly going to suck up or create 60% of their entire capacity. But just the speed at which they're going to do this is stunning. And that's what's happening in this world. It's everything's happening very fast. So be part of it. Also, finishing with meme du jour, maybe there is hope for Bitcoin because Jim Cramer, he is the perfect contraindicator. He said Bitcoin has lost its luster and it's not a real store of value. And per Pete Rizzo, we are so back because whatever this guy says, the opposite happens. This is probably the best bottom signal we see here, not just the hash rate and the price of everything else. I want to say a big thank you as well to Shawnee, T&D, DBF 430, and everybody for coming. K8 out there. Hope you enjoy the week. All of these videos are turned into podcasts and emails, 10 cents a day, maybe even less. I don't even know anymore. And I hope you all learned something. Thank you all for being here. See you tomorrow. Take care, my friends. Bye.